Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. In the last video, we went through a possible scenario of how 200 gigawatt hours of batteries could be distributed between Tesla's various products, how much revenue these will produce, and what gross profit could potentially look like. Click the link above if you've not already seen that video. In this video, we will add all of the operating expenses and capital investments to reach a net profit and see what stock price we can calculate from that. So let's start with operating expenses. Tesla aren't the kind of company to waste money just because they have it and try and solve problems just with more money. By 2022, Tesla's 4680 batteries are in serious production. Their solar tiles should be too, and the likes of the Cybertruck, Semi, and Model 2 are also in production. Their new FSD chip should be out, or at least not too far away. So what will they be spending on R&D? Who can say? I assume they will be doing some research on the next level of battery or all types of batteries. I think they'll be researching new versions of cameras that can do more, perhaps better definition too, without costing too much extra. Not that the existing cameras aren't capable of full FSD, but a better camera would give the car better vision, enabling it to drive faster, perhaps particularly in bad weather conditions. Tesla will be working on their van. I think this will be a seriously cool vehicle. I never thought I could actually get excited about a van before. That's how amazing a brand Tesla is. Tesla will continually be researching manufacturing techniques and finding ways of producing cars cheaper and faster. They may announce a few other cars in 2022. It seems likely a station wagon will come out. I would like to see an affordable coupe too. Perhaps crossover versions of the Model 2. Just bear in mind how few models they actually sell now relative to any other car manufacturer, and then just how much bigger Tesla is in market cap compared to the others. Anyway, considering in 2020 Tesla spent slightly under $1.5 billion in R&D, then perhaps $5 billion is possible at this stage. What they managed to achieve for just $1.5 billion though is so impressive. So can you imagine the sort of technology we will see when they're spending 3 times as much? I can't see Tesla needing to start advertising anytime soon. In addition to that, Tesla's rents on buildings won't increase as they own them all. There'll be a larger utility bill, of course, with all this extra manufacturing. Other sales, general and admin expenses don't really increase proportionally to the rest of the business growth. In 2020, SG&A was only just over $3.1 billion. So I think if we raise this to $10 billion, that should be more than ample to cover all associated costs. I can't see Tesla needing to borrow much money. There may be some lines of credit perhaps, but if we place $1 billion for interest here for good measure, I think that should be sufficient. That would give us an astounding $29 billion of free cash flow. So let's try and estimate what capital expenditure will be at this stage, so we can get to net profit. Texas and Berlin will be complete in 2021. There may be more battery factories being built around them, but the cost of those is relatively small due to the 4680 batteries requiring 1/8 the same size as Nevada required for the same output, using 2170 batteries. I think the major capital expense will be the Model 2 factory in Shanghai. Now, Giga Shanghai Model 3 cost $1 billion, and it has around 250,000 a year capacity. I believe Tesla want the Model 2 factory to actually be closer to 5 million cars a year when ramped up. However, these cars are smaller, and there has been a lot of production improvement since then. But there will also need to be a significant battery factory to go alongside. This is a serious factory, and perhaps it might not all be built at once. It may be in several stages over time, and possibly not a 5 million car factory initially. On the other hand, the world can't get Model 2s soon enough, and at $25,000, everyone will want one. So how about we say $10 billion for the Model 2 factory? Incidentally, no one has mentioned the capacity of the Model 2 factory. 5 million is my own number. I just don't think Tesla are messing around here and want to crank out Model 2s at a level never seen before. I think it likely there may also be another 2 or 3 factories around the world in production in 2022. And not to mention all the robots, gigapresses required, and growing supercharger network. So for good measure, how about we add a further $5 billion on top of capital expenditure? Although it's possible that some of 2021 might also bear some of these costs too. But let's take the total capital expenditure for 2022 as $15 billion. Once we factor in the capital expenditures, we get to a total net profit of just over $14 billion. Or probably more like 16 billion if we want to factor in regulatory credits as well. If we assign P/E ratio of 50 on that sum, then we get a stock price of $673. That doesn't seem great, considering such amazing turnover and gross profit. What's happened here? Well, we've had an enormous capital outlay, which in 2023, the addition of the Model 2 and all other investments could quite possibly double Tesla's car sales again from 2.5 million cars in 2022 to 5 million cars in 2023. Sounds crazy? Well, remember, Elon said that they may be up to 30 million vehicles a year by 2026. When he said this, he sort of implied that it would be all EVs, but it doesn't appear there are any other EVs ramping up at any levels whatsoever close to where Tesla are, because Elon also keeps saying how hard it is to ramp up EVs. So wait, do you think a PE ratio of 50 is fair then? It sounds like a high PE, but given the fact they'll be doubling their sales the following year, and on top of that, the reason the net profits took such a hit was because of the investment for doubling, then perhaps we should adjust the PE. Also, 50 is still significantly lower than today's PE ratio of around 1,000. Let's take another look at that free cash flow figure. This is $29 billion, with a chance it could reach $50 billion in 2023. So what if a better valuation will be around 50 times free cash flow? Then we get a stock price of 1,393. Okay, that's better, giving Tesla an actual PE ratio of 103. Oh, but I expect we want to know what the stock price is at the end of 2022. Well, you see, all these figures are for the entire year of 2022, i.e. the average of the year. So really, we want to know what the Q4 numbers are likely to be, as Q1 likely has had less battery output than Q4. So let's guess in Q1, Tesla and partners were supplying 35 gigawatt hours of batteries. Then Q2, 45 gigawatt hours, Q3, 55 gigawatt hours, and Q4, 65 gigawatt hours. So obviously an average of 50 gigawatt hours a quarter would mean that Q4 is 30% above the average for the year. So that would mean we could actually increase the stock price by a further 30%, taking it to 1,810. Remember, this is not my price target. This is me working out some numbers solely based on Tesla securing 200 gigawatt hours of batteries for 2022. Still, I think I'm pretty happy with it being almost $2,000. And judging by what a lot of you say in your comments, it's what you're all expecting anyway. So I'm glad I could make you happy. But how about we take it one step further? I've tried to be realistic in my approach here, perhaps feeling somewhat conservative, but if we just tweak these numbers slightly, then we can take a more bullish approach, just for fun. Given the fact the Model 3 Standard will likely be only around 1/6 of these sales, and given Model 2 sales would be also quite minimal, the remainder of these cars are all about $50,000 or more. In addition to that, FSD could be at level 5 autonomy, implying that Tesla are able to realize 100% of all FSD revenue, and not have to store a proportion in deferred revenue anymore. The price for FSD would surely have doubled at the stage 2 to at least $20,000. This is a significant income boost, and more desirable to consumers when level 5 is achieved. Cybertruck, Roadster, Semi, Model S and X, these are not cheap products, and will increase the average price too. So how about we use $60,000 as an average selling price? Now, due to higher selling prices, particularly when it comes to FSD, margins should also increase, not to mention how much more efficiently Tesla will be producing cars in Berlin and Texas, and any other new advancements that they may have thought of by then. Also, considering Tesla's margins are already around 30% using 2170 batteries, imagine how much more they will increase with 4680 batteries. But not just the fact they are 4680 batteries, but also that half of them will be manufactured in-house and locally near the car factories, further reducing costs. So how about we change it to 35% margins? We'll leave the rest of the products as they are, as they don't have too much impact on things anyway. Let's just leave robotaxis out of this for now, because whenever we start playing robotaxi numbers, you generally have to add an extra zero on the end of things, and it's still a bit of a wild card at this stage. That then takes Tesla's revenue to $175 billion and gross profit of $60 billion. In this scenario, there is no reason any of the costs should have increased, so we can leave them as they were, resulting in a free cash flow of $44 billion and net profit of $29 billion. Even at a PE ratio of 50, we will see the stock at 1,393. But with a price to free cash flow of 50, we're at a valuation of $2.2 trillion, which would make it the world's largest company at current market prices, generating a stock price of 2,113. But let's not forget to add our 30% on too, taking us to $2,746 stock price, or about 300% from today's price, a potential 4 times return in just over a year. So aren't you glad you hung in there during the dip now? And probably added to your portfolio a bit more as well. This is not impossible if Tesla can achieve 200 gigawatt hours, or perhaps when might be a more apt word. So even if Tesla doesn't hit the 200 gigawatt target until 2023 or even 2024, the stock price should be over $2,000 whenever this occurs. So before anyone says this won't happen next year, even if the stock triples as far away as 2025, then I think you're doing pretty well. This video was all about estimates of 200 gigawatt hours, and it was indicated it should occur by 2022 by Tesla. And this is just me running models from the estimated 200 gigawatt hours, but there's no reason you can't do your own numbers too. Thanks for listening, please hit the thumbs up, and don't forget to subscribe.